Welcome to another bar walkthrough video from SuperfastCPA. I'm Logan, and in today's video, we are going to be going over bar area 3. This is section A2. This is a remembering and understanding topic. Identify and recall basic concepts and principles associated with governmental fund financial statements, such as required funds, financial statements, financial statement components. Now, to be honest, most of this video we're going to be covering the funds because in a lot of the future blueprint topics, it dives a lot more into the financial statements, the financial statement components. So I'm going to kind of save those for future videos. So while this falls underneath this blueprint, we're mainly going to be focusing on the funds in the governmental fund financial statements. Now, to do that, we are going to be doing it the SuperfastCPA way, which is diving straight into the questions to learn the material. Now, if you don't know much about our strategies, make sure you go to SuperfastCPA.com and sign up for our free 1-hour webinar training. In that 1 hour, we will teach you the key ingredients to passing the CPA exam so you don't waste months or even years of your time failing exams. And after that, you're going to want to learn more, so make sure you also check out becoming a SuperfastCPA Pro member. Pro members get access to the full versions of these YouTube videos. So in today's video, we are only going to be going over 5 questions, but SuperfastCPA Pro members will get access to the full 10-question version in the member forum so that they can get a little bit more help and a little bit more practice. So again, if you like this and you like our other products, make sure you check out becoming a SuperfastCPA Pro member. Now let's dive into the questions. All right, here we are at question 1, and like I said, we're mainly going to be talking about the different funds that are in the governmental fund financial statements, so that's what we're mainly going to be focusing on throughout this. Let's dive into it. Something I always like to point out in the questions whenever it's possible is you want to read the last sentence of the question first. Now, in a situation like this where there's only 2 sentences, it doesn't feel that helpful, but it's still a very good habit to be in because you want to have this built into your studying, because when you get to the exam, this is a very good habit to have. Reading the last sentence of the question very frequently will give you the context of the question so that you know what to be looking for as you read through the rest of the question, and that will help you move through questions more quickly, especially on exam day. So let's do that here. Which of the following transactions would most appropriately be reported in this fund? Let's go up to the top. A city government maintains a debt service fund. So again, which of the ones below would most appropriately be reported in that fund? Let's go through the options. Recording property tax revenues to support general government operations, setting aside resources and paying principal and interest on the city's outstanding general obligation bonds, purchasing police vehicles with grant proceeds restricted for public safety, or accounting for proceeds from issuing revenue bonds to build a new utility plant. So again, which one of these would most likely fall under the debt service fund? Think about this, pause the video if you need to, and when you're ready, come back, we'll look at the answer together. All right, here we are. The answer is B, setting aside resources and paying principal and interest on the city's outstanding general obligation bonds. That would fall under the debt service fund. And it makes sense. It'll make sense why it would go in the debt service fund as we read through this. So let's do that. The debt service fund is a governmental fund. And remember, there are multiple different kinds of funds. There's governmental, there's fiduciary, there's enterprise funds. Again, we're going to kind of cover all that throughout these next videos. But again, this debt service fund is a type of governmental fund used to account for and report financial resources that are restricted, committed, or assigned to the accumulation of resources for and the payment of principal and interest on general long-term debt. So essentially, stuff that has to do with debt, or in other words, debt not accounted for in proprietary or fiduciary funds. They have their own debt, by the way. We might talk about that in a future video. So anything that's debt that's not in a proprietary or a fiduciary fund is going to be going through the debt service fund as a part of the governmental funds. Now let's talk about this some more. Setting aside resources and paying principal and interest on general obligation bonds are classic debt service fund activities. It makes sense. You're doing things that have to do with debt. Property taxes for general operations, that was option A, are reported in the general fund. Purchasing police vehicles, and that was option C, is typically reported in the general fund as well. If the purchase is paid from a legally restricted public safety revenue source, it would be in a special revenue fund, and we'll talk a little bit more about special revenue funds later in the video. It is not a capital projects fund transaction because vehicles are not the acquisition or construction of a major capital facility. Proceeds of revenue bonds for a utility plant, and that was option D, are reported in an enterprise fund or a proprietary fund, not in the debt service fund. So again, basically what we learned in this video is that there's multiple different kinds of funds, and the thing that we wanted to focus on here was the debt service fund, and it has to do with pretty much anything that has to do with long-term debt that's not part of a proprietary or a fiduciary fund. It's going to be in the debt service fund. So anything that has to do with that are restricted, committed, or assigned for getting resources and for the payment of principal and interest for long-term debt is going to be in the debt service fund. Now with that, let's go to the next question. All right, here we are at question 2. In which fund are these transactions most appropriately reported? Let's go up to the top. A city receives $5 million in state grant proceeds restricted for the construction of a new public library. It also spends $3 million during the year on construction costs related to the project. So again, in which fund are these transactions most appropriately reported? Is it going to be in the general fund, the special revenue fund, the debt service fund, or the capital projects fund? Now, we just talked about the debt service fund, and this doesn't really sound like it would be in that. It doesn't have to do with debt necessarily, but which of these other ones will it fall under? If you have any idea, that's great. If not, that's okay. We're going to use the answer to learn. So let's dive into the explanation now. All right, here we are at the answer, D, Capital Projects Fund. Let's go through the explanation. The Capital Projects Fund is a governmental fund. So again, we're talking about governmental funds throughout this whole video, not fiduciary or proprietary. The Capital Projects Fund is a governmental fund used to account for and report financial resources that are restricted, committed, or assigned for the acquisition or construction of major capital facilities, other than those financed by proprietary or fiduciary funds. Both the restricted grant proceeds and the expenditures for construction of the library are reported in the Capital Projects Fund. The General Fund, which is option A, is for general operations. The Debt Service Fund, which we just talked about, which is option C, is for principal and interest on long-term debt. And the Special Revenue Fund, which we'll talk about in a little bit, which is option B, is for revenues legally restricted to specific purposes other than capital projects or debt service. So Special Revenue Fund is basically for stuff that's specifically restricted, that's not specifically for capital projects or debt service. So it's basically everything else. But again, we learned about the Capital Projects Fund. It's basically where they are getting resources and they are using those resources or restricting those resources specifically for acquisition or creating of a major capital facility, like a building. Usually think buildings. They're building a library. That probably has to do with the Capital Projects Fund. All right, with that, we learned a little bit more about that. Now let's go to the next question. All right, here we are at question 3. Which of the following situations would be accounted for in a special revenue fund? So again, we just talked about this a little bit. Let's go through the options. Property taxes collected to support general government operations, or bond proceeds restricted for building a new police station, or gasoline tax revenues legally restricted to maintaining city roads, or investment earnings where only the earnings, not the principal, may be spent for parks. Okay, so which one of these would most likely be in a special revenue fund? We just hinted at it a little bit, but again, if you don't know the answer, that's okay. We are using these questions to learn. So let's dive into the explanation together. Okay, here we are. The answer is C, gasoline tax revenues legally restricted to maintaining city roads. So let's go through this. The Special Revenue Fund is used to account for specific revenue sources that are legally restricted or committed to expenditure for particular purposes other than debt service or capital projects. So basically, any type of revenue source that is restricted for or committed for a very specific purpose besides something that has to do with debt service or capital projects is going to be a special revenue fund. A gasoline tax dedicated to road maintenance is a classic example. This wouldn't be a capital project because they're not building a new building or building a new capital asset necessarily. They're just using it to maintain something that already exists. They're maintaining that special road. Now, property taxes for general use, that would go to the general fund. Bond proceeds for construction, that would be for a capital projects fund. Again, construction, buildings, think of that for the capital projects fund. And restricted investment earnings would be for a permanent fund. And by the way, we're not going to really talk about the permanent fund in this video, but we will in a future video. But, restricted investment earnings, that would be in the permanent fund. So we learned that gasoline tax revenue is legally restricted for maintaining city roads, or again, any special revenue that's restricted for something other than debt service or capital projects is going to be in a special revenue fund. Now with that, let's go to the next question. All right, here we are at question 4. How should the $300,000 transfer be reported in the general fund? Let's go up to the top. A city government has the following transactions during the year. They receive $2 million in state grant proceeds restricted for building a new library. They use $1,200,000 of those proceeds for the library construction costs. They pay $500,000 of principal and interest on its general obligation bonds, and they transfer $300,000 from the general fund to the debt service fund to help cover bond payments. So again, how is the $300,000 at the very end there, that's the $300,000 transfer, how is that going to be reported in the general fund? Is it going to be an expenditure? Is it going to be program revenue? Is it an other financing use? Or is it an expense in the government-wide statement of activities? Now, think through this. If you have any idea how this works, that's great. Again, if you don't know, that is okay. We are using these questions to learn this blueprint topic. So if you want to give this a try, pause the video. If not, that's okay. We're going to look at the answer together right now. All right, here we are. The answer is C, as an other financing use of the general fund. So let's go through this. Transfers between governmental funds are reported as other financing sources or uses, not as expenditures or revenues. So if you're transferring something from, let's say the general fund to the special revenue fund, or from the general fund to the capital projects fund, or something like that, where you're staying within the governmental funds, it's going to be an other financing source or use, not an expenditure or revenue. In this scenario, the $2 million grant and $1,200,000 construction expenditures belong in the capital projects fund because, again, it has to do with building a new library and the costs where they actually use those costs to make the library, while the $500,000 debt payments belong in the debt service fund because, again, they're paying off long-term debt from general obligation bonds. And by the way, the fact that it's general obligation bonds tells you that it's not in a fiduciary or a proprietary, because general obligation bonds are just for general use. They're just, a lot of times general stuff is in the governmental funds. So anyway, $500,000 is debt service fund. The $300,000 transfer out of the general fund to the debt service fund is reported as an other financing use in the general fund and an other financing source in the debt service fund. So again, when you're transferring between governmental funds, it's an other financing source or use. Now let's go to the next question. All right, here we are at question 5. In which fund should these activities be recorded? Let's go up to the top. The city of Brookside issued general obligation bonds 5 years ago to build a new high school. This year, the city council approved the budget that includes setting aside $700,000 for upcoming bond principal and interest payments. During the year, the city collected $650,000 in property tax revenues legally restricted for debt repayment and used $600,000 of those resources to pay principal and interest as scheduled. So again, in which fund should these activities be recorded? Pause the video. I actually think that based on everything we've talked about so far, you could figure this out. So pause the video if you need to and come back when you're ready and we'll look at it together. All right, here we are at the answer. A, debt service fund. That one shouldn't have been too difficult. We've kind of hit on the debt service fund multiple times throughout this video. So again, this has to do with long-term general obligations and the debt and the interest associated with them. So it's the debt service fund. The debt service fund is used to account for the accumulation of resources for and payment of principal and interest on general long-term debt. In this scenario, both the property tax revenues restricted for debt service and the actual payments of $600,000 belong in the debt service fund. The general fund is for general operations, the capital projects fund is for construction and acquisition of major assets, and the special revenue fund is for revenues restricted for purposes other than capital projects or debt service. So again, special revenue fund is a little bit broader because it's basically just anything that's not capital projects or debt service. But again, in this case, it is debt service because it's just the principal and interest that has to do with just general obligation bonds. So with that, we've gone over the first 5 questions for this video. Now, before we do anything else, let's do one more part of the SuperfastCPA process called pillar topics. Now, the idea behind pillar topics is as you're going through the questions to learn the material in your review course, you will notice the things that keep popping up. You've seen 2 or 3 or maybe even 4 questions trying to teach you about the debt service fund and the different situations that might happen with the debt service fund, or whatever the case is. Again, you notice these things throughout the questions as you're going, and you pull out these pillar topics or these key points and write them in your own words so that you have an understanding and so that you are, again, pulling out the key things that you need to know from the questions. And as you're doing this each day, you will be building your own personal repository of the most important things you need to know so that you're ready for the exam. So let's go ahead and take a look at the pillar topics for this video. All right, here we are at the pillar topics. Let's just dive straight in. First off, the debt service fund, we talked about this. Accounts for the accumulation of resources for and payment of principal and interest on general long-term debt, such as general obligation bonds. Now let's talk about the capital projects fund. This is used to track resources that are restricted, committed, or assigned for the construction or acquisition of major capital facilities like schools, libraries, bridges, big capital projects. Special revenue fund reports specific revenue sources that are legally restricted or committed for particular purposes other than capital projects or debt service. So things like gas taxes for road maintenance. Now let's talk about other financing uses. Transfers between governmental funds are not revenues or expenditures. They are classified as other financing sources or uses. And then finally, fund distinction. General fund is used for ordinary operations. Capital projects fund is for construction. Debt service fund is for debt repayment. And special revenue fund is for restricted program revenues. That's kind of like a small summary right there. The general fund we didn't go over too much because, again, it's kind of just the everything else fund. It's for ordinary operations. And so we dove deeper into the other funds throughout this video. Again, those are the pillar topics for this video, the basic key ideas that we were supposed to learn. And with that, that is the end of this YouTube version of the video. Remember, we only went over 5 questions, but SuperfastCPA Pro members will get access to the full 10-question version of the video when we post it in the member forum. So if you like this and you like our other products, make sure you check out becoming a SuperfastCPA Pro member. And the easiest way to do that is by actually going to SuperfastCPA.com and signing up for our free 1-hour webinar training. In that 1 hour, we will teach you the key ingredients to passing the CPA exam so you don't waste months or even years of your time failing exams. And then after that, you will have a much better path to learning about and becoming a Superfast CPA Pro member. So check out the webinar, check out becoming a pro member. If you liked this video, make sure to like it and leave a comment. I hope this was helpful, and I will see you in the next video.